So, all of you know, I have been in the US bond trade for a while. I've been getting more and more aggressive as time has continued going on. I look forward to when the correction happens, but I wanted to talk more about why that I'm in this trade, why it matters, and why you should care. So commodities are popping, stocks are popping, things are, happening as they should be. Liquidity is moving through specific systems, therefore creating the rise within the value of the asset. More specifically, the focus now is within TLT. So really, it's going to be the 5, the 10, the 15, and the 30-year, bonds. 2025, all that good stuff. Um, you've seen in terms of since 2022, they've had a major correction. They've been falling. We all know that there's a inverse correlation between interest rates alongside bonds. Obviously, in 2022, the yield on those maturities were less. They're roughly between, let's just say between 1 to like 2%. We'll just use that as like a benchmark example. And now when we look at it and we've seen the rise to 3 to 4 to 4.25, and we know that damn, these, interest rates really have risen, it really leads us to the conclusion that the older bonds are, worthless, etc., etc. Now, I've heard a lot of doomsayers and a lot of, contrarians to my trade position say the US dollar is going to print itself out. BRICS is forming. You're seeing less than a 50% rate of US dollars being used in international trade. I think a lot of those things are necessarily true. And I think that people are coming from a standpoint of strong logic. But this is like 2040. This is like 2060. It's not in the 2020s. I think what you'll end up seeing, especially within 28, is going to be the great American comeback. We tried doing it underneath Biden. That did not work out very well. Trump is very interesting because he is a product of the environment in which has been created within crony capitalism within the United States since Reagan. And one other part that we need to keep in mind, though, is when we're looking at all of these factors, all that I care about in this trade that I find relevant is twofold. Number one, uh, I am being paid a dividend and a yield every single month. And we all know when you look at the flows in the system are beyond important. So we have, certain people within the economic community, absolute legends who will speak about MMT and really speak about how you look at it as a pool, it drains or it gets filled, and the liquidity of that excess that's created will then end up turning around and getting into the financial system, housing whatever it can, so then it can create yield. Obviously, when we speak about first the uneducated economist, who I really do enjoy his videos. I think you should all go check him out. He's a legend. But one of the first things is that you have to learn what the rich people do, and that is going out of their way and taking advantage of creating cash flow and having that flow make its way back over to you. Because if you're, sleeping and you own Asia stocks, you own German stocks, you own French stocks, you own it from all around the world, there's never a moment in the day where there are not assets that are being worked that are generating revenue for you. And you have to be good at investing, not mediocre, not throwing it into an ETF. I mean, hands on. And when you take those things into consideration, cash flow really is going to be king for you. So I overwhelmingly agree with that. Right now, I work 7 days a week. And when you realistically talk about those, obstacles and those challenges, you've then come to realize, holy bananas, there are not enough hours for you to actually be able to make the flow you need. It's unsustainable. Number two, it fucks with your mental health. You're tired, you're exhausted, you're overworked. I've come to a really good balance. This isn't my first rodeo doing this. It's my second or third time having to work more than one job. In Southern California, $20 an hour doesn't work very well when you have high rents. You have high insurance costs because public transportation here is like a toilet. It's full of shit. And, in addition, you have, cars that are relatively expensive depending on what you get, whether that's, new, whether that's used, whether it's a hand-me-down. Some people are in different financial positions, and when we all line those up, those are the type of factors that we have to keep an eye on. Now, the flows matter. There's another legend called Mike Norman, MMT economist. And, when we explain economics, and what he explains is something I find quite fascinating. You all think debt, the U.S. debt, and this is an example he's brought up, is people think that the U.S. debt is China giving us $100 billion via, the actual trading they do. We buy their goods using dollars. They take those dollars and they'll recycle them into, treasuries or assets. I think in some part that does happen from, time to time. But for the most part, Mike explained that at the end of the day, these underlying assets, what they really are is the accounting of all of the available assets in the entire economy that have not been taxed and destroyed by the United States. Because the United States is the owner and creator destroyer of its own currency. It's the own issuer. That's, obviously, right, we have the Treasury and the Fed and all that. But the United States can do that. California is a collector of United States dollars because California cannot print money out of thin air. California has no choice but to collect taxes, put it into a ledger, spend money, and it has to budget itself. Otherwise, it'll fuck itself over in the process of not handling itself correctly. So what I find interesting, number one, is if these are the total accounting numbers, they will not stop. They didn't stop under, Reagan. It didn't stop under George Bush Sr. It didn't stop, under Jr. It didn't stop under Clinton. It didn't stop under Obama, Biden, Trump, even if it would have been Harris or Newsom in 28 or J.D. Vance in 28. In all actuality, they're not going to stop what they're doing because if you stop the creation of dollars, you're going to destroy the system because 50% of the world needs active dollars in order to make them liquid. China has a cap on how much money can be pulled out. I think it was like 7,500 yuan a year is what I think is the actual fucking amount. But it's crazy because if you think about it, what other currency will be able to handle this? Some people could say, well, you talk about BRICS and they want to create a currency and they want different assets, maybe each asset of each region like oil, oil, silver, gold, palladium, whatever that they happen to produce, they can tie those underlying assets to their currency so everyone feels that it's fair. The problem is that this is like, 30, 40, 50 years from now, we can have that conversation. I don't see that happening now. Number one, getting into bed with China is very interesting. And that's a risk that I don't think a lot of people are going to be taking per se. I think it'll be a hedge bet. I think they'll kind of put their eggs in everyone's basket and create it to be equal. Some could say that was globalization, but that's not true because the U.S. dollar was key and dominant within almost every single length of trade in order to get in. So if the politicians aren't going to stop this because it would destroy the United States economy or throw us out of whack, of course I can bring on Peter Schiff and he can go on explaining for hundreds of years it wasn't like this and we can talk all about it. But it's very interesting in the system that we've created. There's so many moving parts, so many different opinions, and so many outcomes. It'll flabbergast the regular person upon the length that, is going on in this, world and how many different doors and the outcomes are going to, happen. So the reason why that I'm in the bond trade, at least for now, after this long tangent, is I think the U.S. dollar is going to be relatively fine. I'm okay. I'm aware of inflation. That's why that we're also invested in TIPS within about a 5-year period. So we can get the adjustment. Oh, well, David, the government's just not going to count the data. Shut the fuck up. If the stock market goes negative, let's just say that for the next 2 years, the stock market does not grow and retracts of around 5 to 10%. Just 5 or 10%, okay? And it goes negative. There is no positive return from stocks, then what are the other options left? What are the other options left? Gold, silver, so we have, commodities, number one. Those are popping. And the other one is going to have to be bonds, corporate paper, and of course, government paper. Canada, the euro, China, Japan, Korea, Africa, Mexico. And when we're left with these bonds, the question then becomes, will insurance companies, big banks, universities, endowments, charities, are they going to have to rush liquidity into bonds? Are they going to have to go long tenure if the market seems like it's crashing? That is the real question. You have to follow the flow. What's the catalyst? What's the reason? That's the reason. And the stock market is at all-time highs. I heard an argument being made from Bloomberg that this is just equilibrium, and the markets could actually go higher. And if they choose to go higher, that they could, but if they go higher, obviously it could happen if you can see Trump pumping another $1, $2, $3, $4, $5, $6, $7 trillion into the market with Bassett, maybe. But also at the same time, if interest rates start to fall, there's an indication of a recession. Those bonds are then naturally correlated upon that. So they're going to have to correct in the value because we have it at around a 4.5 handle. And that's on the DTLT. Now, I have lower, rates than that in terms of sooner and sooner overall maturity. I'm not in between the 1 to 2s, but it's interesting because if this is all seems to be going in the direction that we think it's going in, the bonds have to correct in value. So either Trump and the Fed do it, a recession happens, again, it'll trigger number one. Then you'll have all of the other big players, big organizations, big hedge funds that are looking for that liquidity. There's that pinch. And you see it on the charts. If there's a liquidity crisis, what do you think happens? And that's how I look at it. And I'm going to be happy because I've been collecting dividends and royalties for months. I've been enjoying getting a check on the 1st. Waking up in the morning and seeing my brokerage account and seeing 4 different bond ETFs crediting my account. I want that. That's cash flow. That's the flow. That's what I'm talking about. So it's going to happen whether or not people want it or not. Oh, the US dollar is going to fail. Okay. You may be right about the inflation. You might be right about these other things. But this is an opportunity that is sitting right in front of your face. You can lock it up in CDs. You can lock it up in high yield. But it's that, the stock market can't keep going up the way that it's been going up. It's like the really great quote. It's the great thing that, Newton discovered where you throw up the damn apple. What's going to happen with the apple? It's going to fall down. What goes up must come down. And these governments can try propping it as much as they can. But there's a resilience that's going to occur. And I'm one of the few people that are talking about bonds. Most people are shitting on bonds. But you have to be willing to throw some skin in the game when you believe inside of one of these convictions. So I look forward to it. And when it happens, it's going to be awesome. Because I hope the stock market collapses, my bonds skyrocket, and we rotate out of bonds. And then we finally go back into investing in equities, real companies that'll be able to weather the storm. Because a lot of these companies act like separate entities of countries. Yeah, I know about their currency, but they're smart. Well, we hope they're smart. I hope some of them are smart. And if they like to talk to me about how they can become smart, then I would love, as an economist, to teach them how to become smart. But we're on the road to what is going to be the greatest correction in U.S. history. Some could say, well, the bonds can go down. They're not putting bond yields at 5 or 6 or 7 or 8 or 9%. Tips, maybe. We know that they're going to put their weight on the scale, so they don't have to pay that much. CPIs. When they speak about rents going up, it's not them actually measuring what on Zillow or other, groups. What are the rate differentials? How much are they paying in rent? What are the pros and the cons for what they're being offered for their, services in terms of like what are they renting? No. What they're rather turning their eyes and looking at is dialing up a number, calling up a bunch of homeowners and saying, if you were to charge your family members rent, how much would you charge them? Nobody does that. Nobody gives a shit. That's not real life. It's not real life. So when we speak about these things, we have to think about what we're doing. We have to focus on where the flow is going to go. And I think that I am well positioned to be capturing the flow. And then I'll leave you with one more thing, and then I am done on this one. There was a really great individual that I met at a company that is a Amazon seller. There are geniuses that work at this company. Like all the other companies, management is usually very weak. Ownership is very weak. But the people who work there are geniuses. And there was one person, I'm not going to say his name out of respect, and he told me, David, I imagine the economy like money floating above our heads. And all you have to do is reach up and grab it. And that's cash flow. Do you do this podcast? Do we do these YouTube videos? What are we doing? Are we selling a service? Are we selling a product? Am I a tax person? And I apologize if you hear my dogs in the background. This is a studio that is in a work of progress. Those are the things we're going to have to talk about and we're going to have to think. But you have to grab that cash flow. And that's what we're doing right now.